we're going to share with you the results from our survey of employers and hiring managers all across Canada. So my name is indeed Rowan O'Grady. I'm the president of Hayes in Canada, and I've worked for Hayes for almost 20 years now, 9 of those based here in Toronto. I'm also joined by Rachel Finan here with me in my office. Rachel runs our HR recruitment practice in Toronto, and she will be available to help me out with questions at the end if I get some questions that I can't answer. We're going to keep you on the line for about 25 minutes to share the results of the survey, and then we'll have an extra 10 minutes at the end in the event that we have questions. So we'll see how we go. As Caitlin just mentioned there, if you do have questions, just direct the questions to me through the chat function at the top of your screen, and then I can read them out at the end and do my best to answer them. So just a little bit about the survey before we start. As most of you know, we produce an annual salary guide which shows typical salaries paid out across a selection of industries and functional areas. We cross-reference it for level of experience and the type of company that the role might be found in. And the salaries are based on what we see every day in the roles that we fill and from the candidates that we represent. And it's really become an invaluable reference tool over the last few years for literally thousands of hiring managers and HR managers across the country. And we're really, really proud of basically how simple it is and how user-friendly it is. If you haven't actually received a copy of the 2015 guide, you can just go to hayes.ca and you can easily request a copy for yourself. In addition to the actual salary guide, we take the opportunity to survey our clients about their hiring plans, what are they planning on doing with salaries in the coming year, how are they feeling about their own business activity levels, and also their confidence in the general economy. This year we've included 4 years of data, and it starts to show quite an interesting trend line. And being able to have that information really puts us into a position where we can see things that not everybody can, and that allows us to give really good advice and recommendations to our clients. So today's webinar is about the general market. We've been holding webinars all week about different specific industry sectors, but this covers the total market. And it's based on the responses that we had from 4,000 people this year. It's a record. We had 3,000 respondents last year, 4,000 this year. Hiring managers, HR professionals, internal recruiters, business leaders across the country. It covers 16 different industries or sectors and 20 functional areas or internal departments within companies. I'm going to pull out regional and industry differences and variances as we go along, just for comparison's sake. So I'll just start out with the headlines. First thing to say is that corporate Canada's confidence in the economic stability is at an all-time high. Business activity forecasts have reached a new level of optimism, but that isn't really translating into more aggressive hiring plans. The hiring plans remain consistent. It's positive, but it's consistent. There's a slight move towards larger salary increases, and that halts a 3-year conservative trend. Recruitment as a purpose is evolving, and there's new challenges arising all the time for employers. And finally, and interestingly, we've discovered that employers themselves may actually hold the cards to addressing Canada's skills shortage. So we'll start out with the market outlook and just see what we have on that. So looking at feelings about the economy in general and whether people believe that the economy is going to strengthen, weaken, or remain the same. And for the first time in 4 years, we see more people now believing that the economy is going to strengthen as opposed to stay the same in 2015. The most encouraging thing is to see the movement in confidence over the last 3 years, or 4 years really, moving from 30% all the way up to 50%, believing things would improve in the coming year. As we know, Canada continues to be really significant, and probably forever will be, significantly influenced by the US economy. And that's good news, really, because the US economy is quite robust right now, and there's good news coming out from other countries. Really, the only fly in the ointment right now, and it may turn out to be quite a large fly, is the price of a barrel of oil. So we conducted this survey when the price was still at or above around $60. And from what we've seen so far, just in the key markets that we operate in, I haven't really seen any indication that it's directly affecting anything yet. But I suppose we'll just wait and see what happens, the same as everybody else will have to. So how about what's happening with business activity levels within people's own organisations? So I'll just explain this slide here. The shaded lines are what the expectation was for that year, and then the solid colour lines are what actually happened in that same year, and you can compare the two. So we've got a couple more slides that look like this, so I just wanted to explain that. So looking at this specifically, you've got 70% of companies saying that they're expecting business activity levels to increase in 2015, and that's significantly higher than previous years. We saw 58% seeing an actual increase in business activity levels in 2014 compared to 53% in 2013. So a positive trend there after 3 years of a negative trend. And with higher expectations then, say for 2015, the question is that going to come through and show the actual proportion of companies growing increased over 60% this year? So we will see. Overall though, with 58% saying they increased last year and 70% saying that they expect to do that this year, it paints a pretty good picture. Then if you look at the same thing from a regional point of view, the national average of companies expecting an increase, as I said, is 70%, and you've got Alberta as the most aggressive or most confident at 75%, followed by BC at 72% and Ontario at 69%, but overall very, very good. Then looking at the same thing by industry sector, surprisingly actually I thought, the banking sector feeling the most confident about the coming year and how much their business activity will increase, with 82% of respondents in the banking sector saying that that will happen, which would be really excellent news here in the GTA if that actually does happen. And then mining standing out as the most conservative, with only 52% expecting things to improve in 2015. We've actually got 16 different industries covered in the report, and this is just a selection, so you can get the report and take your time and look at it yourself. How is this affecting recruitment then? So we'll look at permanent headcount plans first. So for the last 3 years, the expectations and the reality have actually been remarkably similar. Generally speaking, people tend to be quite optimistic at the start of the year, so there's always some sort of a gap between expectation and reality. But having said that, it's actually very, very close. In 2014, we had just under 50% of companies expecting to grow in staff numbers, and then it was actually around 45% actually saw that. In 2015, we've got an almost identical expectation to 2014, just under 40% expecting to increase staff numbers, 50% expecting to hold steady, and then over 10% expecting that they would reduce numbers during the year. Overall, it's very consistent. It's quite conservative in a way. 50% of companies saying they will hold things steady. And bear in mind that we just saw confidence levels very much on the increase and at a high of 4 or 5 years. So that to me looks like a desire to improve productivity levels, which would drive profitability, as well as just the fact that the recession is very fresh in people's memories. So I think despite the fact that people are feeling confident, there's still some element of caution in there. One other note of caution to mention would be that we've seen 3 years now where we've got over 60% and now 70% of employers expecting to see business activity levels increase, but only 40% actually planning on increasing headcount. And that raises the question of whether the hiring plans are actually adequate to support these growth expectations. And you would imagine that they would be for a few years, but that could not carry on, or people will, I don't know, people will burn out. So how about variances then by region on hiring plans? Again, Alberta leading the way there with 46% planning to grow staff numbers, followed by BC at 39%, Ontario at 34%. So following the same pattern as business activity levels. Having said that, as I said earlier, we've yet to see really what effect the oil price is going to have on the economy in general in Alberta, and then whether that will spread out into other areas. So far, we have an office in Calgary, we have an office in Edmonton. We haven't seen any material slowdown in hiring. Even up to this week, we're registering around the same number of vacancies, same number of interviews happening on jobs and offers being made. But I would say there's certainly some sense of foreboding in the marketplace, but we'll have to wait and see if that translates into actual changes in plans. You'd suspect that if the price remains low for long enough, then that would probably happen. Looking at the same point, but broken down by industry instead this time, you've got the construction industry there with the highest proportion of employers expecting to increase their headcount in 2015 at 47%. The others really all quite similar. The most conservative is manufacturing, with 57% saying they're going to remain the same, and 10% expecting to reduce headcount numbers. As I said, that's all in the report too. Looking at temporary hiring, and this is a very quick slide, it really looks like things will remain the same as previous years. Vast majority of companies, around 60%, saying that they would hold the use of temporary or contract headcount steady, and around 23% planning on accelerating the use of temps. Just to pause here for a moment and talk about just the challenges that we see coming through from employers when they're going about recruiting. So we all know that when recruitment's difficult, it revolves around there's just a lack of good candidates. The other common complaint is salaries are increasing, and that's difficult to deal with. But we wanted to see what else employers are actually concerned about. We asked this question last year too, and then we can compare the results with this year. So after the usual issues there of skill shortage and salary levels, you've got around 60% of employers starting to think about their own company reputation, and 40% thinking about the company profile. So just to clarify there, I don't mean companies are concerned from a negative point of view about their company's reputation, more so to do with whether the candidate pool is even aware of what that reputation actually is. And I think here what this is saying is that a challenge for employers today when they're recruiting is not just getting your voice, it's really just getting your voice heard among so much noise out there. And it's not so much just recruitment noise, it's competing with all of the noise online and in various forms of the media every single day. Like how do you get noticed, or how do you differentiate yourself as an employer? Looking here at the amount of time it takes to fill a role, and we always feel that the amount of time it takes to fill a role is a good indicator of the pressure that the job market is over or under. So we've decided to start tracking this, and we'll ask it in future years. Then we can see the trend move. This was the first year that we asked this. You can see here the majority of employers, they're saying it's taking about between 2 to 6 months to fill a role where there's a candidate shortage. And then specifically within that, not so much looking at skill sets, but level. They're saying the most difficult level of roles to fill are senior management roles. So bearing in mind the amount of time that takes, the difficulty of hiring senior people, that can have a knock-on effect then in terms of cost and to productivity to the business. You know, you may need to bring in temporary staff or contractors to bring in cover, and even then you could see projects being put on hold as you wait to try and find the right person. We also asked what are the main reasons that a new hire doesn't work out, and not surprisingly really, the top two were a lack of skills match to the role, and then just a lack of personality fit. Just a thing to bear in mind, and it's probably stating the obvious really, but bearing in mind how difficult it is to actually find a candidate and how long you have to work to identify that person and then get them on board, getting the hiring decision right is absolutely essential. We always advise our clients to try and, number one, articulate in as much detail as possible what is it that you're actually looking for in a candidate. And that might seem obvious, but if you get the 2 or 3 stakeholders involved in recruiting and you were to write down exactly what it is that you're looking for, frequently it doesn't match up. And then the next thing is to really challenge yourself as to, are these things absolute necessities, or are they in the category of the really nice to have characteristics? And that can be more difficult than you think, and you'll be surprised at how few people actually do that before they hire. And then once you've got that in mind, then you need to be able to show the discipline to actually stick to that. And if you're interviewing a candidate who you think is a possibility, but they don't have the absolute essentials, as we say to our clients, if there's some doubt about a candidate, there is no doubt about the candidate, and you shouldn't hire them. Just another interesting point here. We did a separate survey last year to look at how companies were evolving their own recruitment strategies, and specifically how they're actually using social media. I can give you the really short version, and basically we found out that most companies see the need to use social media. They want to increase their online profile as an employer, but the majority are not actually doing that. And then added to that, there's kind of a sense of reservation as to the risks around having a higher online presence. 77% of employers said that they were concerned with how social media could have or can have a negative impact on people's perception of their own brand. That's just in general, not as an employer brand. But then 64% said that they were concerned with how social media channels will negatively affect their ability to recruit, which is interesting because you've got, pressure to find particular skill sets. You've got companies quite keen to use social media in a way, but then equally you've got a kind of a sense of fear about how social media is going to affect your brand and how it's going to affect your ability to hire. So it's kind of a conundrum for recruiters now. So I'm just going to talk a little bit about the skill shortage. We have some interesting statistics to share here. And we wanted to do this because it is something that can and is having a real and quite negative effect on some companies. There's actually been a lot of talk in the last year about the skill shortage. Having said that, actually, there's talk every year about the skill shortage. But it's quite confusing talk, I think, during 2014. If you recall, I think, first of all, there was agreement that there was a skill shortage. Then it was tabled that maybe there isn't. And it seems like recently the belief that there is again seems to be gathering pace. So it's all very confusing. Our view is that there's a clear shortage of highly skilled people in specific areas like I was mentioning earlier. And I think if you're an employer, say for example, if you're an employer in the construction industry, you can't say to that person there is not a shortage of 5 years experienced estimators, or if you're working in technology that there isn't a shortage of mobile developers. But at the same time then there's clearly quite a hard challenge for individuals to find work if they're unskilled or at an entry level. So I think both sides of the coin are true, and both are very, very different situations. But anyway, enough of that. We asked whether Canada suffers from a skill shortage, and 57% believe that to be true. We then asked whether your own industry is affected by a skill shortage, and 90% believe that to be the case, which is interesting, as people are far more interested in their own industry, or think their own industry is challenging and maybe others aren't. We asked what you think are the main reasons contributing to the skill shortage in your industry, and by far and away, the biggest reasons, 36% and 24%, were a lack of training and professional development being available, and secondly, a lack of new people entering the industry. So we then asked, what is actually being done in your organization to address the skill shortage? And only 28% of employers said that they were committed to training, and you've got an equal number, similar number there, saying that they were actually dealing with it by combining roles or creating hybrid roles. And I think the combining roles can be a good solution. It creates a lot more efficiencies, obviously, but it does create more pressure on the individual, and we'll come back to that point in a minute. But anyway, so the clear belief that there's not enough training and development in the industry, but less than a third of employers actually committed to doing something about that, and I think that's a noteworthy thing. The lack of skilled candidates definitely has an effect on organizations, so we wanted to find out a little bit more about this and find out specifically the effects that it was having. So first thing to say is, as you can see on the headline, 1/3 of employers said that the skill shortage was actually affecting their own business activity levels or holding them back from growth. We asked, how is it affecting business activity? And 45% said it was affecting productivity directly. And that's interesting because on the one hand, you've got employers trying to improve productivity by not adding to permanent headcount, and then at the same time, they're saying that productivity is being negatively affected by not being able to hire the right people, which is interesting. We asked, what effect is the skill shortage having within your own organization and on your existing staff? And over 30% said that it's causing increased stress leaves. 35% approximately saying that they're seeing reduced levels of office morale, and then quite a dominant proportion, 55%, saying it's causing general efficiencies in their own organization as a result. I think the point here is that companies are trying to do more with the same people and with the same number of people, and that could be quite an attractive business case actually, but it does come with a health warning. Your own plans to keep up with your own expectations could be impeded by either not attracting the right people, by just deciding to not hire people, and then as a knock-on effect potentially actually losing some of your own very valuable people. Okay, so what are employers actually doing to respond to that issue? So you can see there the most popular solution. It's quick, it's highly effective, is use of contract staff or temporary staff, and that's what almost 35% of companies are doing. Having said that, it's a short-term fix, and you know, a sustainable business requires development and promotion of staff internally, and that means having an effective succession plan. But only, I think, 33%, yes, of employers saying that they actually have a succession plan. Another very interesting insight here is that employers actually believe that resolving the skill shortage is in their own hands. 53% saying that that is the case. I was actually very surprised with that. I would have thought that most employers would have said it's actually the responsibility of, or the fault maybe, of the industry associations, schools and colleges, or government or whatever. But we've got a majority here saying that it's actually up to themselves, which is interesting and quite encouraging actually. So, in other words, if companies themselves were taking a longer term view, spending time bringing in entry-level people, and then providing professional training and development, in time the skill shortage would alleviate. But of course, that's far easier said than done, and it's easy to say you're going to have a long-term view, but it can be quite difficult when you've got a lot of short-term pressures that you have to deal with. Okay, we'll look at compensation. This is a salary guide after all, so this is kind of what it's all about. So we'll just look here at how this is affecting salary levels and what's happening over the last few years. So we ask each year how much salaries were increased by in the previous year, and we can show that here from 2012 up to what the plans are for 2015. So from 2012 to 2014, there was clear movement there of more companies offering increases of less than 3% and a reduction in companies offering over the 3%. So you could say that's a shift towards a more conservative position over those 3 years. Now for this year, for 2015, and it's the first time in 4 years that trend is starting to alter, albeit quite slightly. In 2015, slight increase in the percentage of companies willing to offer over 3%, in the 3 to 6% increase. And we think that's really in response to some wage pressure that is building up. And I think it's quite clearly connected with what we saw on the previous slide. So confidence in the economy is increasing, business activity levels have increased, however, not adding more staff numbers and basically hoping to do more with less. And I think that's causing some additional pressure on existing staff. It's not a bad thing to be very busy, it's not a bad thing to be wanted, that's all fine. But I think there is some element of candidates saying, well, if you're not going to hire more people to help and you expect me to do more, then I would like to be paid some more, please. And I think, although it's not a major shift, it's a slight change in the trend, I believe that in 2015, if that turns out the way people are hoping it is from an activity point of view, then we'll see that trend line take a step towards the 3 to 6% increase. The exception to all of that, of course, is Alberta. We will see how long that lasts, where we can see that over 3% increase is being offered by 57% of employers. In Ontario and BC, that's closer to 35%, offering over 3%, but really less than 3% is the norm in Ontario and BC. Looking at the same thing by industry, I've just stuck with the same industries for consistency's sake. Construction being the most aggressive at almost half of employers offering over the 3% mark, and manufacturing being the most conservative, but only 28% offering over 3%. As I said, that's all in the survey, or in the report, you can have a look at it. And then we'll have a look at functional areas within a company. I think this is kind of interesting. So based on this, the functional area within a company that would be treated the most fiscally prudent, if you like to put it that way, is actually procurement. And I suppose that makes sense. It's a little bit practicing what you preach there, with 69% saying it will offer less than 3% increase within procurement departments. So you'd wonder who actually made that decision. It was probably not the guys in the procurement department. The least conservative is HR, which I also think is interesting, with almost half getting an increase of more than 3%. And I suspect, and we would know this if we looked at it, there's a large proportion of HR professionals actually completed the survey, so maybe that's wishful thinking on their own part, but who knows. IT stands out too with a more aggressive approach. which makes sense due to the shortage really of high skilled people there. And that's driving up salaries. And then office professionals or admin staff, unfortunately, with the highest proportion saying there will be 0 increases for the office or admin staff, which seems a little harsh to me, but just saying. Outside then of specific skill sets driving salary growth, how about the actual level of seniority? Again, this is the first time we've asked this question. So we asked respondents to answer, where are you feeling wage pressure with level of seniority in mind? The area where there's the most wage pressure is at the mid-level to senior management level, with over 60%, almost 65% of employers saying that they're seeing that. Then at the junior end, not so much, at around 30%. 50% of people said their company does not offer competitive salaries or at the market rate. In a way, you take that with a pinch of salt, because people always, there's not many people in their company saying we're overpaid here. And then 58% saying the number one reason that a candidate turned down a job offer was because the salary was too low. So just to kind of summarize on this, we've got most employers holding steady with a less than 3% salary increase for 2015. You've got a good proportion, 60-65%, saying they're feeling wage pressure at the management level, and then half or more feeling some kind of sensitivity towards what they're paying or what they're offering to new employees. As I said earlier, if 2015 delivers the growth that 70% of companies expect, we'd expect that next year there would be a clearer shift towards going over 3% increases. Okay, now benefits. What are companies planning on doing with benefits? So we asked, what are the benefits that have the biggest influence on recruitment and retention? And vacation comes in there as number 1, which I'm going to come back to that in a moment. But career progression actually comes in at second place. So if you can refer to career progression as a benefit, we do, just because it's obviously not directly compensation, and it has a big influencing factor on whether a candidate will take a job or whether a candidate will stay in a job. And you can see that's correct because it came here as second place. But as I said previously there, only 35% of companies actually have a succession plan in place. And we said this last year, it was the same thing. But there's a big opportunity there for employers, because a succession plan costs nothing. And think about how impactful it would be to be able to show individuals in the organization on a one-to-one basis, here's the plan for the next 5 years, this is what we think the organization should look like, and this is potentially where you could fit in. It's not a promise, but it's showing that there is a plan and that we've got something in mind for you. And if this is where you could be in 5 years' time, where would you need to be this time next year? And to do that, what it is that you have to achieve, so you can end up with quite a motivated and bought-in individual, with less likelihood that that person would leave. So then if we go back to vacation being the most influential benefit on recruitment and retention, separately we actually asked, which benefits are you hoping to improve upon or introduce? And the most popular ones to look at are introducing or improving flexible work options like flexi hours or ability to work from home. But as you can see there, they actually rank in the middle of the pack there, quite significantly down in the pecking order as to how influential flexible work options are on recruitment and retention. And despite the fact that vacation is such a big factor for employees, I should say, only 16% of employers are actually considering improving their vacation offering. Again, that could be a good opportunity for you to get a competitive advantage over some of the other companies who are trying to hire the same people. Let's see, and I think that that's it on the benefits. Okay, so pretty much done. I think we're on track, maybe a couple of minutes over. I'll just summarize, just give you summary of the key findings again, and then a couple of very brief recommendations from us. So, as we said, confidence in the economy is at a 4-year high. That is not converting into more aggressive hiring plans. As companies, it would appear, hope for improved productivity. It is putting more pressure onto existing staff. Skill shortage is still clearly present, and it would seem to be set to accelerate. Slight increase in percentage of employers offering more than 3% for the first time in 4 years, but the majority is still offering less than 3%. And then most employers seem to be taking a short-term view in solving the skills shortage in their own business. So just our recommendations from a recruitment point of view and a development within your organisation. First of all, we would advise thinking about a talent pipeline, and we don't mean that from a recruitment perspective. It's really internally a talent pipeline where you've got a long-term succession plan, and does that match up with the business expectations over the next 5 years? Secondly, considering using temporary or contract staff, it does take the pressure off the current workforce, but it's not a commitment to a fixed cost that you would have difficulties undoing. Number 3, start thinking about your own employer brand. We use the term EVP, like an employer value proposition. So that's really just a fancy way of saying, why would somebody want to come and work with your organization, or why would somebody stay with your organization? Try and articulate what that is, agree what it is, why is it different, and then you've got to figure out how to get it out there through digital channels and to raise your own profile. That's something that's really a medium to long-term strategy. When it comes to salaries, I think companies have no choice but to be competitive, but at the same time, there's only one company paying the most, and you probably don't want to be that guy. So think about salaries or compensation outside of just base salary. Think about performance-related bonuses and incentives. We found, and we actually did some research on this, most individuals are willing to take some element of risk on their base salary, with the possibility of being able to earn more dependent on a performance-related bonus, and it's a win-win situation there, particularly from a productivity point of view. And then finally, evaluate the existing workforce on the potential, and start investing in training and development and upskilling people from the junior, mid-level up towards the senior level. And I know that's easily said, but it's a very, very valuable investment, worthwhile investment, I should say. So, okay, that is the end of the key messages that we wanted to share. So thank you very much for listening. I hope you found it useful and you got a few good ideas or thoughts from it. If you do have any questions, you can just, as I said, direct them at me. You can type them into the chat box, and I'll do my best to answer. So we'll do the traditional uncomfortable waiting in silence for questions to come through. And as I said, we've got Rachel there as well. Okay, so there is a question. So based on the current price of oil and today's announcement of bank stocks being downgraded as well as layoffs, do you think the results of the survey has changed significantly? Has the results of the survey changed significantly since the survey was completed? I'd have to say yes, particularly in Alberta. I'm not sure whether it would be directly affected. I'm based in Toronto. We certainly haven't seen any effect, or we haven't heard any chat from our clients about feeling more conservative. No difference in BC yet. We haven't seen any change in Ottawa. In Alberta, what we've seen is no change in activity, but a lot of talk, a lot of chat, and a lot of concern about what's happening. I think if we were to rerun it, I bet you'd see a change in confidence in Alberta, and probably a change in plans, I would suspect. So yes, I think you're probably right. I think really our perspective is it doesn't matter what price it goes down to, it's all to do with how long it stays there. I think a lot of companies have said to us that they feel that it's almost an engineered situation, and the price of a barrel of oil should not be that low. There's no real reason for it, so they're holding out. But I think if it remains there for a long time, then we could be in trouble. Next question, somebody says, what skills are most in demand in the job market? Well, I think if you look at industries that are busiest, so the areas that we see where it's the busiest and consistently the busiest would be IT and the construction industry. Within IT, it's been revolving around mobile developers. A big thing that's come through in the last year, or very, very recently actually, is a real focus on security. That whole situation about the Sony hacks situation has got companies very scared of seeing their personal and potentially very embarrassing emails being broadcast to the world or to people that they wouldn't want to hear. So we've seen a real movement on that. And then in the construction industry, it's consistently difficult to find candidates almost at all levels, particularly, estimator with 3 to 5 years experience. Electrical estimators, forget about it. Nobody knows where all the electrical estimators are hiding. Project managers with high-rise experience, kind of $30 million plus projects are very difficult to find. The other thing that we see in other functional areas are roles that would bring efficiencies to organizations. So very experienced procurement people are popular to find, and we would see some HR positions where it's to do with bringing in new efficiencies to an organization. Compensation was very popular about a year ago in HR. So yeah, there's a lot of areas. I think it's fair to say, you know, the intermediate to senior level management positions almost in any industry are hard to find. That's common. So okay. Right, somebody has said, you know what, and this is a fair point. So he said, do you collect sufficient data through your survey to report on trends in Atlantic Canada as a region? It would appear that we didn't because of the way we presented that. I actually am not sure about that. I don't know, Caitlin, if you know the answer to that question, was whether there was the right amount of information there. You would appear not. She's not answering me, so I don't know about that.
Sorry, Rowan, just sorry, just looking up. We do collect data from Atlantic Canada. It is a smaller sample size, so it's not reported in these webinars, but we do have that data available.
Yeah, it's probably worth saying we do not have an office in Atlantic Canada, and therefore we wouldn't have probably the volume of contacts in our database to be able to get it. We'll have a look. If you want to drop me an email, whoever asked that question, and I'll come back to you about that. That's an easy thing to do. Another question, somebody said, why are companies more concerned about their employer brand? I don't think they're concerned about their brand being like poor, like that people think they're a bad organization. I don't think that's the case. I think companies are just, they're concerned about how do they get their brand out there. You know, you'd think that with technology things get easier, but what we hear from a lot of our clients is that as each new technology comes out, it seems to get more and more difficult to recruit because it's more and more complicated. What do you do? Like, do you need to dedicate people in your organization to being the social media team for recruitment on top of the social media team that you already have to sell your brand and sell your product or service? I don't know. So it's that. I think that's what that's about. It's about raising your profile as opposed to anything else. Does the salary guide include information for the healthcare industry? I believe it does not. We do not specialize in recruiting for healthcare. We do specialize in recruiting for very specific areas. Healthcare is not one of them, so I don't believe there's anything about healthcare in there. Okay. Anything else? No? Hopefully I've answered those questions okay. Fine. All right. So just to say it again, if you do need, or if you want to get a copy, go to hayes.ca/salary guide. If you want to drop me an email, it's right there, rowan.o'grady@hayes.com, and we will try and help. But otherwise, that is it. Thank you very much for dialing in. I believe we had a few hundred people on the call, so thank you very much for dialing in. Thank you to everybody who completed the survey and all 4,000 respondents who did that, and to everybody who worked on putting the report together. It's been very successful. And all the best for 2015.